Hi, all, it's your guy here, the unknown, and today I want us to look at something very important. I want us to look at a very nice strategy that is highly profitable, okay? And that is day two continuations, okay? I assure you, if you master this one and take it every time it presents in a good way, it will make you highly consistent, okay? So this is one of my favorite setup, and today I'm sharing it with all of you, okay? I want you to know how it looks, okay? So I'm gonna explain a little bit about it, and we're gonna go straight to the charts, okay? So day two continuations, it's like it appears in two ways. It could be a dump to pump. I will explain what that is, or a pump to dump, okay? These are the only two things we are looking for, okay? So if it's a dump to pump, what does that mean? That means, say for instance, we have a market that has been going down, okay? It could be for 2 or more days, okay? 2 or more days. Then maybe it corrects a little bit, it goes down, okay? And then say maybe it corrects and goes down, okay? And then as you can see, this is 1 2 3 days. It could be anything, 2 days, 3 days, or even more, okay? And then all of a sudden we have a market that goes down and then it goes up and closes here, okay? So what this market has given us, it's a first green day. What is a first green day? A first green day is, as you can see, this one is opening high and closing low. That means if you are on a daily time frame, this day is gonna be a red candle, okay? This one does the same. It opens here and it closes here. If you are on a daily time frame, this means you're gonna have a red candle. Same applies to day 3. It's gonna be a red candle. And on day 4, we're gonna have a green candle, okay? So that's why it's a first green day. It's the first green candle after days of consecutive red days, okay? I hope you understand that. And this is not just a first green day. If you look at this example, this is the high of the previous day. Let me just change the color of this, okay, and use a different color. If you see, this is the high of the previous day, okay? This is the high. So what this day did, it broke the high of the previous day. This makes it day 1 of breakout traders, and I'll explain, okay, what that means, okay? When we say day 1 of breakout, okay, we simply mean that, okay, there are people who are trading higher time frames. Say for instance, there are people who are trading 1 hour time frames. There are people who are trading 4 hour time frames. There are people who are trading daily time frames, okay? And those people will actually see this candle as a breakout candle. And if you are trading, say for instance, a daily time frame, where are you gonna put your stops? You're gonna put your stops right here. Most of the time people will put them right below the low of this day, okay? In other words, breakout traders, those who are breakout traders, will actually execute a trade here and put their stops here, okay? That's what happens. So this is why we are saying day 1 breakout traders are in the market. In other words, we mean that those who are trading on a daily time frame, they have executed trades and their stops are right here below, okay? This is where the 3 day of breakout traders is coming from, okay? You have to understand this. Their stops are here. They executed a position because why? Because they are breakout traders, okay? Whenever there's a breakout, they want to get into the market, and that is the goal, okay? So I hope you understand. So if we get a market like this, okay, what are we anticipating the following day? Look at this. This is a dump to pump, okay? It's a dump to pump. It's a dump to pump. What this means simply means, if we get a first green day, okay, first green day, okay, this is a first green day, and then our high will be right here, okay? This is the high of this day. So when we come the next day, we want to see something like a dump. It doesn't matter. It could be 25 pips, okay? It could be 50 pips. It could be 70. It could be 75 pips. If it's 75 pips, it will be a very good setup. Why? Because it's gonna have three levels of 25, 25, 25. Okay, that means it's gonna drop 25 pips, 25 pips, 25 pips. That's three levels. Okay, so this is a dump, guys. This is a dump. Okay, I hope you understand and grasp this well. Okay, this is gonna be our dump. Okay, so when we get a dump, since we are talking about day 2 continuation, this is day 1 of breakout, guys, and we are anticipating day 2 of breakout, guys. Why? Because this market has been trapping volume down. Remember, when they break the previous day's low, that means people are on a daily time frame are actually executing here and putting their stops on the high. Okay, so at the high of each day there are stops, hence why we are anticipating that they're gonna go up and go and hunt for those stops that are actually at the top. Okay, so that's the main goal. I don't want to explain too much because I don't want it to get too complicated. I just want you to understand the easy part. It's fine. Okay, so now we have a dump. Okay, so we know that market makers will always dump a market to pump it. In other words, if they want to buy, okay, which this is a sign. In other words, this is a break in structure. Okay, this shows that now momentum is strong towards the upside. Okay, so we need a dump because market makers, whenever they want to buy, they will dump the market so that they can pump it. Pump it is buying. You know that when they are selling, the market will go down because they sell high volumes. Okay, we can't match their volumes. Okay, so when they are ready to buy, they will dump the market. Okay, and another reason for this is a pullback. Why? Because there are people who actually want to chase markets, and whenever this market is going up, it will be going up in a course of 3 sessions. There are people who actually want to be executing trades all along the way, and they don't want to close. There are people who want to milk the market. Like for instance, they believe that okay, if they open a trade right now, they can get many bips throughout the week. So those are the people the market is waiting for. Okay, I'm not saying long-term traders are bad, or it's being a long-term trader it's something bad. No, I'm not saying that at all. Long-term traders have their own strategies that work for them, which is highly important. So now we have a dump. Okay, so we want to buy in line with them. Okay, this is our continuation. Is it always gonna happen? No, it won't happen every day, but most of the time it will happen like this. Okay, most of the time it will happen. Okay, however, there are some days when we will get a first red day like that. Okay, and then when we come the next day, we will find them gone already. So this is not a good setup. Okay, so most of the time you're gonna get this. So this to me is in a way untradeable. Okay, so that's what you have to know. What we are actually looking for is we want to see that nice dump so that we can have this pump, and sometimes they will come and bounce on the high of yesterday and then continue. This is the goal. Okay, so let's jump to the second part. Okay, now we are talking about a pump to dump. You see, now it's inverse. This was dump to pump, now it's pump to dump. So for a pump to dump, what do we need? We need a market that is going up maybe for day 1. Okay, and then maybe it corrects a little bit, it goes up for day 2. Okay, same scenario. Okay, I'm not gonna spend time explaining here because I've already done that. Okay, so now it's on day 3. Okay, and when it's on day 3, say maybe yes, it gives a peak and then it comes all the way down. Okay, notice how I'm paying close attention to the low of the previous day or the high of the previous day. So in this case, you see, it's not just a first red day. What is a red day? It's the first red day candle after consecutive days of green candles. Okay, so we know as the market is going up, whenever they break, the stops are at the low of the previous day. So this is why we actually expect them to go and get those stops. Why? Because nobody is gonna get a free lunch. They know that there are many people who want to actually hold and milk the market forever, and that's not gonna happen. So you see, it closes here, okay? And then the next day, what do we want to see? We want to see a pump, pumping something, pumping a jumper castle. It goes up, dumping something. If you want to dump something, you are throwing it down, okay? So now we need a pump, okay? The next day we need to see a pump. It could be 25, it could be 50, it could be 75 pips. Sometimes it could be 100, okay? Or even more, okay? And then this could be in the course of 2 to 3 sessions. And then what we need is to see that this is what we need. We need to be on the dumping side, okay? Not the pumping side, because you can measure the dumping side and it's quite fast. This pumping side, as I said, can happen in the course of the recession. Some people are not that much patient, okay? So, and besides, you don't even know where it's gonna end, okay? What if it's pumping and it's gonna pump up to here and then dump, okay? So you need to see this, okay? And then you'll get your entry opportunity for a nice dump, okay? So I just hope you understand this. This is day one of breakouts, okay? As I mentioned, they broke the previous day's low. So this is what we call a pump and a dump, and this is what we call a dump to pump. And all this is part of a strategy called actually it's a setup called day 2 continuations, okay? So what is the setup we want to see? This is the setup, okay? We want to see a dump to pump, okay, from a market that has been going down. This also helps trap more volume as it sends people down. It's a break-in structure, it sends people down, okay? I did explain market structure in my previous video, okay? So you have to understand these things. So this is also a break-in structure, okay? So it pulls back inside, okay? Then it continues the dumping part. So I hope you understand what this is. And now we're gonna go to the charts because I don't want this video to get a little bit too long, okay? So now let's go to our charts and see what's happening or what happens, okay? As you can see, this market has been going up and up. As you can see, it has just been going up, okay? Up, okay? It has been breaking the highs, and all of a sudden we get a market that is actually dumping. It breaks what? The low of the previous day, okay? And it closes as a breakout day. As you can see, this is a first red day, and it's not just a first red day, it's a first red day which eventually became a day 1 of breakout, guys, okay? Day 1 of breakout, guys, okay? Day 1 of breakout, guys. Breakout traders are now in the market, okay? They are now in the market, as you can see, okay? They broke here, and in my previous explanation, let's see, it was this one. Which one? Okay, it was this one where the market was going up. We did say that they have to break the previous day's low if the market has been going up. This gives us a break in structure, okay, showing that momentum is strong towards the upside, okay? So now it's gonna depend on the strength of the move, okay, the strength of the trend, okay? Because now the main objective is to trade in line with the trend, okay? We don't want to be counter trending. Let me go back a little bit, okay? We don't want to be, you see, the market has already broken down, so we want to continue in the direction of the trend. You see, this is a newly established trend. We want to go in direction with it. If you follow Paul Tudor Jones, he did explain that, okay, he catches the high or the low, okay? That's how he makes most of his money. And if if you don't know him, just go and search Paul Tudor Jones. You will see he's one of the best traders in the world. Okay, one of the best. Okay, just go and search about him. You get a lot of motivation from him actually. Okay, Paul Tudor Jones. So he uses an EMA of 50. Once it's crossed, that's where he wants to enter. Okay, so you can see he wants to go in line with the newly established trend. So that is what we are doing. That's the main objective of this thing, to go in line. Okay, in line. Okay, so I'm gonna be really fast right now because I don't want to waste time. Okay, as you can see, this market came, it made a low here and it closed here. The following day, what did it do? The following day, we have a session which is Asia. You see Asia, we have we can put our line either here or here because it's the one session that's before the US, and you see the US stops everyone who was going high is stopped, and they come for the guys who actually were in profit from here. Okay, so they are pumping. This is a pump. They are taking prices high from here to here. This is a pump. Okay, this is where they pump the markets up. Okay, why? Because when market makers want to sell, they will take prices high. They want you to buy high. Okay, so they want to be selling high. Okay, so you see now we get our dump. Most cases the dump is so fast. Okay, and of course our initial target is the low, but you can also observe how it behaves on the low. Sometimes it will give a nice continuation. So this is a nice day 2 continuation, straightforward, fast. Okay, these moves are so quick most of the time. Okay, even though some of the times they will be actually facilitated by news, but I did share with you a strategy on how to trade news. Okay, just go to my videos and find a video which says trading news like a pro. Okay, you'll find a strategy on how to trade news. So guys, you see this is a day 2 continuation. It's a very nice day 2 continuation, straight down. Okay, let's look at another example, and I'm gonna show you how they happen. Okay, but I'm not gonna put them in a specific order where, say for instance, I'm gonna start with the ones that are dumping. No, I'm just gonna show you day 2s. Okay, so just you can take screenshots actually. Okay, take screenshot. Okay, here's the thing. Again, this market has been going up, breaking highs. Okay, it's a different currency. This was Great Britain pound USD. Now it's USD Swiss franc. Okay, it's actually Swiss franc. Okay, so here it is. They are gonna vary. You see, we get a first day, which is a first red day after market that has been going up and up and up. You see, this market has been going up and up and up. So all we get now is we get a first red day. That is not just a red day. Okay, remember, a first red day must have a peak. Okay, that's the most important thing. So now it's a day that has broken the low of the previous day. Okay, the low. Okay, this is crucial. They've broken the low of the previous day, and now they closed here, and then they pump the market. So they're gonna vary depending on the strength of the move. You see, they use Asia. Okay, and then London becomes that inside bar. Okay, London just becomes that inside bar, and then US comes and stops out everybody from the Asian session. Okay, and then boom, look at how they behave. They come and pin the low. Okay, look at how they behave on the low. They come and pin the low, and they give a very good continuation. Okay, so this is a day 2 continuation. This is day one, day two. We are in a market that is already broken down, as you can see, and then they pump to dump. Okay, they pump. They want to send you up, send you up, send you up. They are always going to send you in the wrong direction. Let's go to our previous example. They want to send everybody up. Go up, go up, go up. And people who are chasing candles will believe in this nonsense. They will actually be going up. Okay, and that's what the market makers want you to do. Remember, when we are trading on an intraday basis, there's a lot of manipulation. Okay, so this is day two continuation. Okay, day one of breakouts, they broke out here. I'm not gonna label and put all the things because I don't want this video to get long. And then this is the continuation. Okay, because I always talk about day two continuations, but I never explain them. You see, this market has been going up, up, up. Okay, and then all of a sudden, let's see. Okay, yes, this market has been going up, up, and then we get an inside day. This is an inside day. Okay, and then we get a day that actually opens here. It goes up and makes a peak. Okay, makes a peak, and then it breaks the previous day's low. This is highly important. Break the previous day's low, and they close here. The following day, they pump the market up. They send everybody up, 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 and then they collapse during the US session. They come back, retest the low. Okay, the low of the previous day. They retest it. Boom, they go down. So this is how day two continuations will present. Okay, this is how they present. I'm not marking my charts. Okay, so I just want to show you the importance of actually understanding the strategy. Okay, they pump. This is pump to dump. Okay, they pump to dump. Market makers will always pump to dump. Okay, that's what they will always do. When they want to sell, they pump and dump. However, do note how they actually engulf this closing price of yesterday. Okay, note how they engulf this price. They engulf it and they come and retest the low. So it's always how they behave on this areas. Okay, that's the most important thing: the high, the low, and the open. Okay, so that's something you should pay close attention to. Okay, so let's go to our next example. Okay, let's see. We have a market that has been going down, and then all of a sudden it gives an inside day. This is an inside day. Okay, this is an inside day. Nothing was broken. After market that has been, you see, this market has just been going down. We get an inside day. Okay, when we get an inside day, we get a day, you see, yes, it makes a peak. Okay, and in my previous video I didn't mention something. When you are doing the day 1, 2, 3 breakout, okay, note if they break the low of the previous day, say maybe it's day 1 up, day 2 up, okay, and then they break the low of the previous day, that's a reset, because the main objective is the stops of people are actually coming down. I'll show that towards the end of this video. Okay, so as you can see, we get our first, I showed you this market has been going down. Okay, then we get a day peaks and it closes here. This is a first green day. Okay, this is just an inside candle, guys. This is the first green day, okay, which closes as day 1 breakout. Okay, day 1 of breakouts. Okay, this is day 1 of breakouts, as you can see. And then the following day they dump the market. They're showing everybody we are going down. And there are people who always want to counter trend. They know that most people are always trying to counter trend markets. And if you see, this gives a break in structure. That's something you must understand. It gives a break in structure. So you don't want to counter trend a break in structure. Okay, you don't want to counter trend that. Yes, there are times when a break in structure will fail, but you don't want to be counter trending a break in structure. Okay, so as you can see, the following day they dump the market, and they pump the market high. Okay, just look, they engulf the opening, they go test the high, they pull back and continue, and just observe how they are bouncing on the EMA. So this is important. These trades are quick as compared to this dump. The people want to be on everything. They want to be on the dump, they want to be on the pump. But the truth is, if you understand what you're doing, you know what you are looking for. And here's one thing. Look at the currencies. Euro USD, yes, it can move during the London and during the US session. USD CAD, usually it moves during the US session. This one, the pound, moves well in the London, and because it has the dollar, it also can move well in the US session. So you just have to understand the currency you are trading and also understand what time they might present good moves. Okay, so this is a day 2 continuation, a very good one. Okay, now we are on gold. As you can see, this market has been going up, gave an inside day. Okay, this broke nothing. The following day, it gave a first red day, which made a peak. Okay, it made a peak and it comes and breaks the previous day's low. These are the most important things to note. It breaks the previous day's low and then it closes here. Okay, so from the low, this market pumped. Okay, they continued pumping in the Asian session. This is a pump. Okay, and then as you can see, they dumped, but they dumped during the London session. Okay, and then they look at how they actually come and retest the low for a continuation during the US session. The thing is, we want to trade in line with the trend. Okay, this is a newly established trend, so we want to be in line with it. Okay, so that's the most important thing. Okay, that's the most important thing. So we're gonna go to our next example. As I said, I don't actually want to be making a long video. Okay, look at how they actually behave on the open. Okay, you see, they keep retesting the open, they move away from it, they come, try to retest it, fail, go down, retest the low, boom. Okay, this is a day 2 continuation. Okay, we have a market that has been going up and up and up and up. This is an inside day, and then we get a first red day. Okay, this is what you should know about first red days. Okay, they make a peak. Okay, so I'm not saying all first red days must actually break the low, but if we're gonna be looking for a day 2 continuation, we need first red days that broke the low. Okay, sometimes you'll get a first red day or a first green day, and then the following day will be day 1 of breakouts. That's when we'll actually be looking for a continuation. But this is a good one. You see, it actually goes down. This market is broken down, so the next time we want to be in it, we want to be in line with it. Okay, so look, they pump it. Actually, they use the Asian session to pump, they use the London session to pump, and they go all the way to US. They give a first hour trade, boom. Yes, it was facilitated by news, and we have a strategy on how to trade news. Okay, but this is a day 2 continuation. They are clean, they are fast, hence why I love them. Somebody once asked me what is my favorite strategy. It's day 2. This is the setup, this is the signal day, this is the setup we want to see. We want to see a pump for a dump. Okay, there are people who want to be in all this nonsense since 3 a.m. if you're using South African time. They want to be in the market and they want to be trading all this garbage. Guys, you don't have to trade all this nonsense if you know what you are looking for. If you know what you are looking for, you can just be patient and wait. You will get your good trade. So clean. It doesn't go to day 3, but so clean. You are in and out fast. Okay, and here's another one. Okay, we have a market that has been going, okay, this market has been going down. Okay, this is an example where you get a first red day, but this first red day actually doesn't break out of anything. I just spoke about it a couple of seconds. They make a peak, they close here, they open here. This, you see the open, you see the close. This is actually a first green day. Okay, however, it didn't break anything. And then when we come the next day, here's the secret. Wait. Okay, wait for the setups to complete. that people want to actually be on the market every minute. Wait. And here's another secret: you are a hunter. Okay, hunt for these setups. It's not gonna happen every day. However, this is why we have a lot of assets to look at, because you will get it almost every day from a different pair. Okay, if not every day, you'll get it every week. Maybe twice a week you'll get this. Okay, twice a week you might get it from different pairs. Okay, so that's a good opportunity. Look at this. This gives us our first day of breakout. This is our first green day. The market has been going down. That's the most important thing. They make a peak, close, open low, make a peak, close high. First green day. Now they fail to break out, so we look for the next day. What does the next day do? The next day breaks the high of the previous day. Fine. Okay, if you have a setup to be in this one, it's okay, but it doesn't mean that just because it moved a lot of pips you missed something. You didn't miss anything. There are people who actually have setups to trade this. Let them take what their setups allows them to, because if you are taking something that you don't have a setup for, then you are actually becoming liquidity for those who have setups to take the trade that you are taking without understanding. So in other words, you might be donating, or you will actually be donating to those who have setups for that move. Okay, there are people who have setups for this. I don't. Okay, you see it goes up, and here's the next day it actually dumps, and then during Asia they go up. But here's another fascinating thing: it doesn't really break. It's not convincing. Okay, so now we actually have the low of Asia somewhere here. Okay, we have the high of Asia, which is here. Okay, London comes, makes its own low. US comes. What does US do? US comes and it stop hunts everybody from Asian, so everybody is closed out. Then they continue with the day 2 continuation pattern. You see, then they continue. So guys, it's so clean, it's so easy. Okay, if you get a first green day that doesn't break, wait for the next day. Let them give you day 1 of breakouts. Okay, because this means there are breakout traders who are opening here and putting their stops just here below the previous day's candle. Okay, so that's what we want to see. Okay, so that we can get a day 2 continuation. Okay, here's another example. We have a market that has just been going up and up. You see, it gives an inside day. Okay, this one breaks the high. Okay, fine, but look at this day. Look at it. Opens, it goes up and peaks. Okay, it goes up and peaks, and then it breaks the low of the previous day. Oh, sorry, I chose a triangle. Okay, fine. It breaks the low of the previous day. Then it closes. Okay, from the low. That's where the pump begins. They pump. This is Great Britain JPY. It moves well. The yen moves well in Asia. The pound moves well in London. So this one can move well in London or in Asia. Okay, you must know your currencies and when they move. Okay, so you see we have a pump: 1 push, 2 push, 3 push to the top. It creates this first, you see this, it gives a first hour trade, which is a continuation, a very nice continuation. Okay, very nice continuation. So this is a first red day which has broken. Then we need to see the pump. If they continue going, if we don't have a setup, let it pause. Okay, it's all about high probability. Now this is, and sometimes they will pump, but they won't give you a setup for a sell. Okay, you do nothing. Just note at how they engulf this level here. Look at how they engulf this level. Then you are done, guys. You are done so quick. This one takes time. It took a lot of time to actually create the pump, but the dump is fast. Hence why I said I love day 2 continuations. They are so fast. Okay, let's look at another example. Okay, we have a market that has been going up and up and up. Okay, this market peaks. Okay, you are a hunter. You are a hunter. Okay, somebody might ask you, but why are you actually selecting these trades? Because your job is to hunt. You can't be a trader if you can't be a hunter. You must hunt good setups. That's what your job is. You are a hunter. Your job is to hunt good setups. Okay, not trade nonsense happening every day. No, hunt. Do your day count, analyze every day. Okay, and then hunt for these setups. Okay, this is a first red day. Okay, this is a first red day, and here's why we need to see the breakout. It breaks structure. Okay, it breaks structure, and we break structure, then we get a pullback to get breakout traders. That's the main goal. Okay, this is the breakout. They close, then the pump begins. Let's calculate the pips. It could be anything from 25 to 75 or even more. This is 60 pips. You think this is small? Guys, this is something huge. This is Great Britain pound JPY. It moves well in the London session. Okay, just look, they give you a sell signal. Okay, I'm not going to talk about the patterns. We'll talk about the patterns in another video. Today I just want to be focusing on this. Okay, and I think I'll be done in less than 10 minutes. Okay, this is a day 2 continuation. Look at how they come and retest the low for a continuation during the US. This is a nice trade, guys. Nice trade. You are done so quick. You see, 50 pips done before the session begins. If you want to hold, it's okay. If you want to close, then find another entry. It's still okay. If you want to close and move on, what I prefer is once you get this 50 pips, you can just lock, close it, and get off the screen. Don't give back the market what you actually got from it, or else you can just have different take profits. Lock profit. Once it pulls back and continues, lock your profit, let it continue. Okay, so this is a great day 2 continuations. They happen most of the time. Every day, no, but if you have many currencies or many assets, you are gonna get them. At least one every day. Okay, or at least one every 2 days. That's more than enough. Okay, let's look at another example again. We have a market that has been going up. Okay, gives an inside bar. This market has been going up, as you can see. It gives an inside day, and now it peaks. That's the most important thing when it comes to first red days and first green days. Look, it comes and breaks the low. Okay, if you don't have a setup, just because it moved many pips doesn't mean you missed anything. Okay, you only miss if you fail to take your own setups outlined in your trading plan. Just see, the next day, okay, it closes low. The next day they pump. Okay, this is GJ. It moves well during the London or the Asian session. You see, they pump, and then they give you 1, 2, 3, something like a triple top, and then they dump the market. I told you, this is the initial take profit. Unfortunately, here they don't go below, but you got your nice trade. How many pips did this give? You see, it's 100 and something for somebody who maybe took after this pullback. Okay, because there was a pattern breaking structure and then continuation. It's just that I'm not gonna go to a 5-minute chart right now. Let's look at another example. This market has been going up, breaks here, and then all of a sudden it peaks, it closes everyone, then it comes and breaks the low of the previous day. It comes back. This is part of the pump. And then the following day we need to see that pump again. It pumps, gives a head and shoulder. This is Euro JPY. It moves well during London and Asia. Okay, it pumps. How many pips? How many pips? Okay, how many pips? See, this is more than 90 pips of pumping. Then look at how fast the collapse is. Yes, it might be facilitated by news, but even if it's not facilitated by news, this is the most straightforward trade you'll ever get. Look at how they pull back, and during the US they come and retest this low for a continuation. Look at how they engulf this opening. So guys, look at how they give you a triple a head and shoulder. Guys, this is day 2 continuation. This is day 1 of breakouts. Once you get day 1 of breakouts, then you continue. You don't just look for any red day, you look, or green day, you look for one that has given you a day 1 of breakouts. That's why I showed you an example where they didn't actually I don't remember where it was. I don't know if I'm gonna find it. Which one was it? I don't remember, but it's fine. I believe you saw it. I gave you an example whereby they gave a first red day which actually failed to actually give breakout to trigger breakout traders into the market. I showed you that example. Yeah, it's this one. They gave a first green day that actually failed to bring day 1 breakouts into the market. So we need to see a breakout day first day 1 of breakout traders into the market. Once they are in the market, we need to see the dump the following day. And the reason I also showed you this one is because they appear in different variations. Look at how they, one thing I've observed with gold is nobody gets a free lunch. You are in profit, they will come for you. So that's one thing you have to know with gold. And once they stop hunt, look, they only stop hunt at the opening, and then they are gone. You think this is a coincidence that they are stopping hunt, they stop hunt, pin engulf right at the opening? It's not. How do they treat the opening? How do they treat the high? How do they treat the low? Okay, and if it's from a first red day, you'll see mostly they will actually they'll be engulfing or actually give an entry behavior at the high or at the opening. And if it's going down, that's when they will give at the low. That's something you have to observe. Okay, so guys, this is amazing. Okay, this is amazing, and this concludes my video right now. And I believe you all saw what we are talking about. This is what we mean by a dump to pump, and this is what we mean by a pump to dump. Market makers will always do the opposite. Okay, so you must observe many days of, could be 2 days or more of maybe let me not explain again, because I explained it here, explained it here, explained it here, explained it. So guys, I hope you understand, and if you are not subscribed, just subscribe. Even just giving a like to this video will be helpful, really helpful, and I will appreciate it. Okay, because I'm giving a lot of free information that honestly there are people will charge you for this, but I don't want you to go through what I went through, buying courses, struggling, because you don't even know where to start from. I want you to start from a place where you know what a setup is, you know what a signal day is, you know the behavior to expect. Okay, because there are people come to the charts every day and just try to be guessing directions, and that is the wrong thing. Okay, hence 90% up to 95% of people are failing. Okay, so guys, I did promise that I will make another video where I explain 1 to 3 in terms of intraday. I will do that. It's just that I wanted everybody to understand what's happening here. So guys, I really appreciate your time. I appreciate your energy. Just go and actually put this into practice. Okay, and it will work out, believe me. And here's another important thing. People come to me and say this doesn't work. It doesn't work. First, why? Because you are not hunting. Okay, you want to come to the screen today, you select GJ as if you are selecting Bible scriptures. You just open the Bible and point your finger and do you want to read there. Then you come to your charts and you want to just open GJ and you want to find this. I told you, you are a hunter. Okay, you are a hunter. And there's a video where I showed you your competitors. Your competitors are actually disciplined people whose job are to trade only. They sit in front of the computers all day long. We have an advantage because we trade when we want. Okay, we trade what we want. We are not obligated by anyone. We are not working for a company, hence we should be highly profitable. Okay, there are people who are actually required to be opening trades because they are working for prop firms full time. So we are not like that. However, those are our competitors, disciplined people, people who breed the market, people who have psychologists, people who have unlimited capital, people who have the best systems, people who use algorithms to trade, people who have mastered their setups, and they actually get training maybe on a weekly basis just to master that setup. People are being paid bonuses to outperform us. Okay, and then you just want to come to a chart and just say, oh, you are choosing any day, and you're saying no, but this didn't happen. Yes, it didn't happen. Why didn't it happen? Ask yourself. Okay, why didn't it happen? Why didn't it happen? Because you are not hunting. Your job is to hunt. There are days you'll come to the screen like here, like here. You'll find a first. You see, this market has actually been dumping. You'll find the first green day that the whole behavior, it's fine, but it doesn't really have that peak, outstanding peak, but it's fine. But when you come to the screen, they already went up. Okay, in such instances, I don't want to trade this move. Most of the time it's gonna give this. Your job, just like a lion, you can't say, actually a lion can't say, oh God, hunting doesn't work. No, you know that most of the time lions go to hunting, they actually fail. Do you know that there are many lions that have died due to hunger because they couldn't catch their prey? It's not as easy as it should be. So your job is to hunt. Sometimes it will fail. The setup will fail. This actually renders the setup a failure because it didn't dump. It broke out. Yes, they might dump later, but I don't care about this. This is not sustainable. This is not part of my setup. Okay, I want to see them dumping. So there are days when this setup will fail. Okay, there are days when the setups will fail, but your job is to hunt. Be there. Okay, be there. Don't trade every day because sometimes they will fail. Just present yourself, and if the setup presents in a good way, take it. However, do your job every day, every night. I did say that from this week, probably tomorrow, we will start doing our analysis together so that we can target Wednesdays and Fridays. Okay, but even though we do that together, there are days that we will have our analysis for tomorrow for a pair. Say maybe, okay, tomorrow we're expecting day 3, this and this and this, and tomorrow it will just fail. That's normal. We are not moving the market. Okay, we trade what we know. We repeat it every time it presents. Go and hunt. This is not just opening a Bible and pointing a finger. I'll read where my finger lands. No, hunt for your setup. Hunt for your setup. That's why here I gave you an example using different currencies. This is to show you that this will happen, but most of the time you will have to hunt for it. Hunt for it. Find it, take it, dust it. And this is actually where you can actually put size in, because you know that you're not trading every day. You know that it doesn't present every time. Sometimes it will fail. So when it presents well, you want to be in with a size. Okay? Remember, you're a trader, you're not a gambler. Okay? So guys, I'm sorry it became long, but I had to explain this because there are people who come back and say this doesn't work. It doesn't work for you because you want to just come and open Euro USD today. Okay, and then you expect, oh, this should work. No, it doesn't work like that. You see, There are days when, say, maybe this is a first red day. Yes, it is. It's a first red day. Everything has been presented the way we wanted it to present. However, look, the following day it just closes. Okay, it just closes. Yes, they pumped it later. Okay, but this is a problem to me. Okay, this is not a good setup for me. Yes, it's set up in a good way, but I don't have the pump that I need. So I don't take those things. Okay, I don't take those things because I need a high probability. I want where they start pumping either from this day or they'll start just pumping, as long as they pump the market to dump them. Okay, this one they just broke out. You see, there are days when it will fail. Just understand that your job is to hunt, be there at the right time. Okay, so guys, I thank you. I thank you so much. And another important thing, just to re-emphasize this, or actually know your currencies and when they move. Great Britain pound JPY moves well during the London, and it can move. The yen moves well during the Asian session. Euro USD can move well during London, or else it can move well during US. So when you're trading anything with the US, it will move well during the US, and I highly advise trading the US session because that's when most of the trades are going to come from. But if it doesn't have the US like GJ, most of the trades might come from London. Okay, there might be good trades during US, however most of the trades might come during London. If it's Euro JPY, GA, okay, Great Britain pound, Australian dollar, you know that one will move well during the Asian session or the London session. So that's the most important thing. Know your currencies and when they move well, and go and hunt. Your job is to hunt. I'll say that many times. Hunt. Thank you guys.